Today, I would like us to look at the difference between periodic inventory system and perpetual inventory systems. It's either you say perpetual inventory system or a continuous inventory system. Okay, let us start with the periodic inventory systems. Periodic inventory system is the old method which was used back in which was used a long time ago, where there is no modern technology to determine the value of stock currently. Bullet number 2, inventory bought is recorded as purchases. So whenever we record goods that's why bought, we use an account called purchases. With purchases, we are referring to an expense account, meaning that whenever we buy these goods, we treat them as an expense. Then, at the end of the financial year, goods that were not sold for that particular period of time, for that particular financial year, those goods are converted into an asset, because those goods there is still a value attached to it, or attached to those goods in such a way that we can still sell those goods. So that is why we treat them as an asset, meaning that purchases or stock that is on hand at the end of the financial year, or at the last day, or on the last day of the financial year, we convert it from an expense into an asset, because it's the trading stock or inventory on hand. Closing balance of stock is not readily available. As and when we are selling these goods, the closing balance of stock is not readily available, simply because there is no technological measure, there is no technological technological applications or softwares that will assist us to track goods coming to the shop and goods being sold. But we strongly rely on one measure, which is stock count. So without performing a physical stock count, we cannot tell, or rather it is difficult for us to tell the exact balance of stock, or the exact closing balance of that particular stock, because it's not readily available. Closing stock is determined after physical stock count has been conducted. So for us to be able to establish or to calculate the value of closing stock, we will need first to conduct what we refer to as a stock count. By determining a physical stock count, it means that we are counting items, or we are counting trading stock one by one until we get a total of goods on hand. So that is the only way of determining the closing stock, is by conducting a physical stock count. Then that is where you start discovering that there is stock missing, or there is stock that has been damaged, simply because you cannot track now and again or continuously the value of stock. You need to close all operation and perform a stock count. Last point, or last bullet, cost of sales must be calculated. A cost of sales amount, or total, because we are referring to an